A basket of tomatoes that sold for 23,000 naira a few weeks ago now sells for as much as 50,000 naira. A bag of rice that cost 50,000 naira is now approaching 57,000 naira. Yet farmers are not necessarily earning twice as much. So where is the money going? Why are Nigerians paying more for food every month? And what could happen between now and the end of the rainy season? This is Nigeria Food Inflation Intelligence.
The inflation warning signal. Nigeria's headline inflation has climbed to 15.93%. Food inflation is even higher at 16.96%. This marks the third consecutive monthly increase. But behind these numbers lies a much bigger story. A story of weather, transport, fuel, storage, and the long journey food takes from farm to market. For millions of Nigerians, these forces determine what appears on the dinner table and how much it costs.
The perfect storm. Nigeria is entering one of the most difficult periods of the agricultural calendar. Between May and July, grain markets experience what traders call the lean season. Stocks from previous harvests begin to run low. New harvests have not yet arrived. Supply shrinks. Prices rise. At the same time, weather agencies are warning of severe flooding risks across 34 states. Heavy rains are already disrupting transport routes, damaging crops, and increasing spoilage. In the north, heat waves are creating another challenge. Farmers face reduced productivity. Crop yields are threatened. And supply chains become even more fragile.
The transport problem. Many Nigerians blame inflation solely on food shortages. But one of the biggest drivers is transportation. Moving food across Nigeria has become increasingly expensive. Even though diesel prices have eased at refinery level, transport operators continue charging high rates. Truck rentals for interstate movement remain costly. Drivers face delays. Road conditions worsen during the rainy season. And every extra cost eventually reaches the consumer. By the time food reaches Lagos, Abuja, Port Harcourt, or Onitsha, transportation has already added a significant markup.
Following the commodities. Let's look at what is happening across Nigeria's major food commodities. Garri prices are falling. Fresh cassava harvests are increasing supply. New stocks continue to enter urban markets. Traders expect further easing in the short term. Beans are also experiencing relative stability. Storage inventories remain available. Current prices present one of the better buying opportunities for households and SMEs. Rice tells a different story. Supply is tightening as the next major harvest remains months away. Prices are already climbing. Any flood-related transport disruption could push prices even higher. Palm oil continues its upward trend. Rainfall is slowing harvesting and processing activities across producing states. Supply pressure remains evident. But nowhere is volatility more visible than tomatoes and pepper. 1 week can completely change market conditions. Truck arrivals determine prices. Weather determines spoilage. And consumers ultimately pay for both.
The hidden cost of middlemen. One of the most revealing findings is the widening gap between farm gate and retail prices. Rice currently shows a spread of approximately 45%. Farmers sell at one price. Consumers buy at another. Between them are aggregators, transporters, wholesalers, market associations, and retailers. Some markups reflect genuine logistics costs. Others reflect market power and speculative behavior. Understanding these margins is becoming increasingly important for traders and policymakers alike.
Opportunities amid inflation. Every challenge creates opportunities. For traders, onions remain one of the most attractive arbitrage opportunities.
Supply conditions in northern markets can differ dramatically from prices in Lagos. Garri also presents regional opportunities, especially between rural producing markets and major consumption centers. For SMEs, beans currently offer one of the strongest inventory building opportunities. Rice buyers may also benefit from securing supply before peak flood risks arrive. Those who understand seasonal cycles often outperform those who simply react to headlines.
What happens next? Over the next 30 days, food prices are likely to continue rising. The lean season remains active. Flood risks are increasing. Perishable commodities face high spoilage rates. Over the next 90 days, conditions become less certain. Early harvests may provide some relief, but flood impacts could offset gains. Looking 6 months ahead, the outlook improves. The arrival of major harvests across Nigeria should increase supply and ease pressure on food prices. But much depends on weather conditions, transport infrastructure, and market stability.
Conclusion: food inflation is not just an economic statistic. It is the story of a truck stuck on a flooded road, a farmer facing extreme heat, a trader managing shrinking inventories, and a family trying to stretch its food budget. Understanding these forces allows businesses, traders, and consumers to prepare before the next price shock arrives. Because in Nigeria's food economy, the biggest opportunities often belong to those who see the trends before everyone else.
If you found this market intelligence report valuable, subscribe for weekly insights on Nigeria's economy, commodity markets, food prices, trade opportunities, and business intelligence. Every week, we break down the trends shaping markets across Nigeria and West Africa, helping traders, SMEs, investors, and business leaders make better decisions. Follow Ovanjohn for data-driven analysis, market research, and actionable business insights. Build, automate, analyze, succeed. Visit www.ovanjohnbinaiskit.com for more reports and opportunities. Subscribe, like, and share this report with anyone involved in business, trading, agriculture, logistics, or market analysis. See you in the next Market Intelligence Report.